Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased price action analysis, guys. I'm looking at a weekly chart here and you can see last week's candle, this past week, we had a very choppy week, tight range type of week, and it came in the form, what is this, a doji candle? All right, doji candle, indecisive, very choppy, not good for bulls, not good for bears, pretty decent for sheeps. But I will say this, guys. That 410 level that I mentioned in the past video, that 410 to 410.5 zone that I mentioned in the past video, as you guys see, as these arrows pointed out, it continues to hold, guys. It continued to hold. Bulls continue to defend. There is still demand coming in that zone, 410 to 410.5 zone. But as you guys can see on the chart, the bounces aren't showing as much follow through. Okay, they're not showing as much follow through. As a matter of fact, if we look here, since Tuesday, technically speaking, since Tuesday, SPY has been trending downwards, giving us, you guys can see it, lower highs and lower lows, except for when we get to that 410 to 410.5 zone. All right, so you already know we have a lot of demand there, but with each test, the demand or the buy orders, they get absorbed. So you guys, if you're a bear, this is the level. 410 to 410.5 zone is the zone that you want to pay attention to. You want to see that level, that zone continue to get tested. Because every time it gets tested, as I said, buy orders get absorbed. The more buy orders get absorbed, eventually it will run out. And once it run out, SPY can start the breakdown lower, okay? If we lose this level, this zone, 410 to 410.5 zone, that's very bearish. That is when Uncle Charles will be looking to go short. I will be looking for puts. However, okay, we have a gap around 407.4-ish, all right? And then there is that critical zone level at 406. You guys can see where I'm pointing at off this pink trend line. Around 406, we had a lot of buying pressure there back in early April. Okay, so those are the two critical levels that I'll be watching. The 78.6 fib level, which I gave it a zone at 410 to 410.5 zone. If that is lost, go short, look to long. If you want to swing puts, do it. But the way I would swing puts, if I short the 410 breakdown, I'll be looking for profits around the gap fill around 407.5-ish. I'll take most profits there and I would swing the runner. Okay, make sure you have time on it and don't take any risk that you can't handle. But yeah, definitely watch 410, bearish below, and my ultimate target will be 406, $4 move. And if we can break that down, if we break that down, that will be even more bearish. All right, and it will trigger more downside. All right, as of right now, the break of this structure, of this rising channel, still holds. All right, we just need to see more follow through. We know the level, 410 to 410.5 zone needs to fail. We see the buying pressure there this week. We also had a very, very choppy week. So that tells us that it's building strength. It's building strength for a big move. Okay, every time the market starts getting choppy, we know that it's building strength for a big trend move. All I'm saying is to trade it unbiasedly, whether it's to the upside or to the downside. Okay, now you guys got the bear case scenario. Loss of 410, get bearish. Now as far as being bullish, needs to stay above 412. It managed to recover the 412 level end of day. So now it needs to clear more level. All right, this rising channel is at 415. Very critical level. You guys seen in the past. April 14th high and April 19th. We even, on April 18th, we even had selling pressure. I talked about it in a previous video. Selling pressure. This yellow line right here, that's the 415 level. Selling pressure, selling pressure, selling pressure. And now 415 is based on my rising channel. So we already know it needs to stay above 412. 413.5 is a level that I got as well. And 415 is above. Clearing 415 would break a strong sell zone and it would recapture this rising channel and it will put momentum back in the bull side. Okay, back on the bull's side. Look to long when we clear a resistance. Look to short when we break down a support. Let's try to keep this simple and follow the price action. This is what I mean by follow the price action. Wait for the setup and just do and just react. It's not about predicting or anything like that. We're just looking to react. Uncle Charters can't tell you the future. You know, I can give you a general lean if that could help. My general lean is above 410 and above 412. I would lean bullish. I would just need to see follow through. And to be bearish, my general lean would be bearish below 410. Okay, so I just keep it that simple. Above 410 and 412 bullish. Breakdown of 410, I'll be looking to short. I would be getting bearish. Okay, now triple Q, similar situation here, where you see triple Q battling the 5 daily moving average. Okay, so I have support at 315.3 ish, and there's a critical support around 313.2 ish. Okay, it's battling. To be bullish, I need to see it recapture the 5 daily moving average. Okay, above 318. Look to long. All right, with what will I be targeting? Above 318, I'll be targeting 320, and above that would be 321.5. All right, above 318, look to long. I'll be targeting 320, and above that 321.5. Now, as far as the bear case scenario, it needs to get below 315.3 and break down 313.2-ish. Okay, you guys see we had buying pressure, a bunch of buying pressure from that 313.2-ish level, 313-ish level. Okay, below that level is very bearish in my opinion. Triple Q has been chopping, building strength for a while now, to the upside, to the downside. Wherever it is, guys, have the patience to react unbiasedly, waiting for the right setup, which is a breakout of the level or a breakdown of, support or breakout of resistance. Okay, IWM still battling that 176.5 level. Watch out for those false breakdowns. Okay, it happens a lot. It happened with IWM intraday with the 176.5 level before it recovered the end of the day. But yeah, but bears, they need to close end of day below 176.5. That's when I would get bearish based on this context. A lot of buying pressure there at the 176.5 zone. All right, so we need to close below to indicate to us that the buy orders are gone. All right, 176.5 fail. That's bearish. 174.3, 172.5, and 170.4 would be in play. Okay, now got that resistance at 179.2. All right, and there's some resistance at 178. Okay, so look to long, breakout 178, 179.2 above, and then 181-ish. Yeah, 181 to 181.7 is zone in play. All right, stay long, stay bullish above 176.5, bearish below it. That's my equilibrium level. Now Tesla, we had a gap down, big gap down, and after it gapped down, it gave us a little more downside. Came a few cents of Uncle's 50% fib level from January 2023 low to February high. Very close, but look like it wants to chop. It's giving us this inside candle right here. Okay, this Friday's candle is within the range of Thursday's candle. So based on this setup, you want to go long above 170. You want to go short below 160.5. All right. So, but like I said, the 50% fib level is at 159.7. If that support level cannot hold, that would be very bearish. 155 would be in play. 146, and there's a gap fill around 144. All right, it'll start with the breakdown of 159.7. But if you're a bull, you need to see 170 recapture. There's some resistance at 166.5 ish and 168.5, but ultimately bulls need above 170 to really be bullish and get 173.5 and 176 back in play. Okay, Apple, critical level, it's looking critical here for Apple, where it tests this yearly orange trend line. All right, look to short below 164. I would be targeting let's see. The purple trend line is now at 163. All right. So breakdown of, I'm sorry, 164.5. All right. That's what the yearly trend line is. Breakdown of 164.5 will put 163 in play. That's this purple trend line that Apple's been riding up all year. So if it loses 163, guys, that will be very bearish. Look to short. There's a gap around 161, another gap at 158, and I got critical support or a key level at 156.3-ish. Okay, for Apple, all right? Below 164.5, look to short. Now, as far as being bullish, I think it need, in my opinion, we got some resistance at 165.5 and 166.5. If it can recapture any of these levels, preferably or especially the 166.5 level, I would feel a little comfortable longing a little bit up to 167.5-ish to 168 zone. Above 168, that will put 170-ish in play. All right. So yeah, above 166.5, I would be bullish and favor more upside. Below 164.5, I would be bearish and favor more downside. DXY over here, it's still chopping, lingering around support. Support's at 101.6. Let's see if we can, we get a daily chart close below it. That should put 101.8 and 100.1 back in play. All right, there's resistance at 102.2. Needs to clear to put 102.6 and 103.4 back in play. Okay, now look at the VIX, man. So yeah, we last Thursday, it recaptured at 17 level, but Friday closed back below. So the false breakdown, setup did not work on this one. It giving us a dead cat bounce. We'll see if it can go. I mean, as long as below 17. 15.7 is the next target, downside target, but it's also possible it chops above and below 17. But yeah, if bears can keep VIX below 17, 15.7 would be in play. There's resistance at 17.7. If that clears, maybe we can go back and test 18.5, which is around the 20 daily moving average, and 20 above, okay, based on this pink trend line that I have here. Okay, 20 would be resistant, above 20 would be pretty bullish because it's a breakout mode. Okay, here's a dark pool order for Friday. Nothing over $1 billion. Most of the activity was at the 411.81 level. Nothing over $1 billion though. Going to the option flow for SPY, filter it for 500k premiums or above. 78% into calls. Okay, guys, I've been looking at these options for a while. It's not that often we get more call flows for calls than puts. All right, but one thing that sticks out is this one, over 49,000 in size. April 24th is the expiration date. 415 strike price. Holy moly, what are they expecting? A gap up? That's a big size order in my opinion. All right, very short term as well. I don't know if it's gonna work out for them, but we'll see on Monday. QQQ 88% in the puts. Seeing a bunch of sweet aggressive put orders coming in for the 290 strike price here. Have some time, May 19th and September 15th. And the rest is nothing that really sticks out. IWM, still getting a bunch of block orders coming in with the very in the money puts, decent, big size, good amount of premium. Got some sweep orders here for the 172 strike price. Okay, so we're getting some bearish, aggressive bearish sweep orders coming in. Apple, 54% in the puts, 46% in the calls. This one that's over 5,000 side, 170 strike price for May 5th. So somebody's betting to the upside. Pretty aggressive in my opinion, over 800k in premium. Tesla, 68% in the puts. Still getting those very in the money puts. Block orders, not very aggressive. Many months out. And last but not least is the VIX. 100% into calls for the VIX. All right, thank you guys so much for watching. I hope you guys found value for this from this video. And if you want more content from Uncle, please consider joining my Discord. Other than that, have a great weekend, and I'll talk to you guys in the next video.